Well, thank you very much for being here. I'm just looking at your bio right now, Mark, and now I know what it's like to be an announcer on the first tee as Tiger Woods walks up, because there's a fair bit here. It's a little intimidating, so let me see how I can do here. Thanks for being here. Of course, you're going to be giving us an update and outlook on the North American containerboard and corrugated markets. Mark Wilde is the Bank of Montreal's senior analyst at the North American paper, packaging, and forest products sector. For more than 2 decades, he has repeatedly been recognized as one of the sector's best stock pickers and frequently quoted sector expert. He has been cited in the New York Times, Wall Street Journal, Barron's, and other publications, and appears repeatedly on CNBC. He is a regular member of the Institutional Investor All-American Research Team. Prior to joining Bank of Montreal in 2014, Dr. Wilde spent more than 25 years at Deutsche Bank, then Bankers Trust. At Bankers Trust, he served as director of U.S. equity research and was a partner in the firm. Earlier in his career, Mark was employed as a senior economist at Wharton Econometrics in Philadelphia. Wow, that's a lot, Mark. I think that's probably pretty good, isn't it?
I think that's enough.
Bottom line is, if you don't know who Mark is, chances are you better check your number. You dialed into the wrong Zoom call. Thank you very much, Mark. And I think Renee will be handling your presentation, the screen. Renee, if you want to kick that up now. Were you guys able to work out how you're going to switch slides, or are you just going to say next kind of thing?
I'll just say next.
Yep.
Okay.
Okay, great. Hopefully
Excellent.
Renee can hear me.
Okay. Can you hear me okay, Don?
Yeah, I can hear you great. Yeah, that's awesome.
Okay, super. Well, listen, first of all, I want to thank you and Stephen Moore and Renee for inviting me to do this. I've spoken to a lot of AICC groups over time. I really enjoy the AICC membership. Very entrepreneurial people. You're always having to kind of avoid getting squashed by the elephants in the room. I also want to say very honestly, I think Mike has a very tough act to follow, because I think in my career, the best trade association head that I've dealt with is Steve Young. Has just done a great job over time. And some of the things that you guys have put up and made accessible to others have really, helped teach me and others even more about sort of the role of the independents in the market. There was a series of short video clips that AIC did about 8 or 10 years ago that just looked at what individual members were doing in the market, how they kept themselves relevant and competitive in the market. And I thought they were just great little clips. I passed them along to several of the people I deal with in the investment community. So with that, I think we'll get rolling here. I do want to point out on this first page that I do provide AICC members free access to the research we produce on the industry. And so if you would like to be included on our research list, so really only 2 things that I ask. One is that you send me an email at the BMO address here. And the other thing is, if we can make this a 2-way street where periodically you allow me to just check in with you and see what you see going on in the market. That's just it's an excellent reality check for me. Very, very helpful in monitoring the market. So let's move now, Renee, to the first slide. And we'll just talk a little bit about what's on the agenda today from my perspective. So I want to do just a few different things. We're first of all going to talk about kind of current market trends on both the demand side and the supply side. I will talk about the November price hike, as well as what we're seeing in offshore markets and pricing. We'll touch on financial performance in the industry. And then I want to spend some time on talking about what's ahead from both a demand and a supply side. We'll spend a little more time talking about kind of new supply on the mill side of the industry, as well as new entrants into the markets. So to get us started, let's go and now talk about what has been going on so far this year. The box demand has really been remarkably strong this year. This has been I think a big surprise, not only to me, but to many of us, and really was amplified by the FBA numbers that came out yesterday, which showed really the strongest month of the year in terms of box volumes. We did these slides prior to yesterday. So year-to-date box volumes are actually up on an average week basis, 2.4%. And what I've done here on this graph is just to give you a longer-term view of the relationship between box shipments, which are the bars on a percent change basis, and industrial production of non-durable goods on a percent change basis. And you can see that over time, they track quite well together. And then you can also see that the last several months have been really quite a dramatic outlier, because we got a pretty sharp drop off in industrial production, and yet the box volumes have held up remarkably well. So I would say so far this year, box volumes are probably 800 basis points better than I would have expected just 6 months ago. So that's the demand side. Let's go to the next slide if we could, Renee. What's behind the strength? I think there are really at least three things that I would point to. One, a number of you are probably getting some firsthand experience with right now, and that's been the tremendous acceleration in e-commerce growth. I've got a couple of figures here which highlight that. One is e-commerce sales, and these figures come out of the Census Bureau, and they show, essentially about a 40% year over year in e-commerce sales in the second quarter this year. We don't have third quarter data in yet, but e-commerce, as a percent of overall retail sales, was about 11% second quarter last year, and up to about a little over 16% in the second quarter this year. So really a dramatic increase in e-commerce sales, with people staying closer to home, more direct to the consumer deliveries. Another way of looking at the same thing is just to look at Amazon's North American sales, which have generally been running up about 20% on a year-over-year basis, but have really spiked up sharply over the last couple of quarters. So one thing is the acceleration in e-commerce volume. I think this has had a particularly big impact on companies like IP and WestRock, which do a lot of e-commerce business. But I think that because they are so busy right now with e-commerce business, some of this is actually trickling down to independent converters who are benefiting as IP and WestRock and others actually have to farm out some incremental volume. So that's the first issue. Let's go to the second issue. The second issue is that particularly in the US, we've had a lot of government stimulus, which has really offset the drop off in wages. And we've really got just a little picture here which looks at government transfer payments and the increase in those payments relative to the drop off in wage compensation. You can see actually the government transfer payments have actually been much bigger than the drop off in wages. So it's left a lot of consumers actually with a little more money in their pockets this year as a result. I think the third issue, if we can go to the next slide, has been some of the pantry loading behavior that we saw, particularly in the early months of the pandemic. We may have some people from firms like Cascades and Kruger on the call here. They would be pretty familiar with what's happened in the tissue market. We saw a big spike, particularly in consumer tissue expenditures, consumer tissue shipments early in the pandemic. Those numbers have remained actually quite strong, but have definitely tapered off on a year-over-year basis. Conversely, we've actually seen a pretty big drop off in the third of the market that is away from home tissue products, just because people are in offices less, people are traveling less. So, but the the net for at least the consumer tissue market's been very strong volume this year. Another example, I cover the number of the can making companies in North America, and their volumes have been very, very strong, not only in the second quarter, but so far in the third quarter this year. So we think about this big kick from e-commerce, probably up, 40%-ish, representing, maybe 15% of the market, 12 to 15% of the market, and then the government stimulus payments, and finally the pantry loading. So let's go and look beyond demand in North America. We are also seeing strengthening in offshore markets. Both Smurfit and David S. Smith, which are the two biggest players, integrated players over in Europe, are reporting improving volumes. I got some data last week from FEFCO, which looks at European corrugated shipments. And I think what's interesting here is that European market actually dropped off more significantly than the North American market in the second quarter. The volumes have definitely been improving on a pan-European basis, but they're still essentially kind of flat on a year-over-year basis. So they've picked up, but they certainly are not as strong as we have seen here in North America. And then the final one that I'll just touch on briefly is the Brazilian corrugated shipments, which got hit hard back in the second quarter, but have been up sharply over the last 4 months. The September number there was up about 15.5% year to date. Brazil is up just under 5%. Let's go to the next slide, if we could. On the supply side, we did see a lot of market downtime through July, and that helped to maintain a reasonably tight market. I've put up sort of announced economic downtime from IP and WestRock, the two biggest players in the market, and companies that report their economic downtime on a quarterly basis. And you can see a big jump up for both of them in the second quarter. We know that other big integrateds like Georgia Pacific were also taking downtime. GP had the big Toledo, Oregon mill out in May and then out again in July. GP, of course, is private, owned by the Cokes, fairly secretive. So we don't know what the total downtime aggregated to, but it's fair to say that there was downtime from players beyond just IP and WestRock. The upshot of that is that we've actually seen inventories continue to taper down over the last probably 4 or 5 months. And actually, if we factored in the data that came out yesterday, we'd see that inventories have gone down even further. The October drop in inventories was about 141,000 tons. So inventories have been going down since late spring. Inventories continue to go down fairly significantly in October. And all of that has kept a pretty tight market. Let's go to the next slide. I think that improving demand and the economic downtime that I've talked about have also been exacerbated by some of the forest fire activity on the West Coast, which also took capacity out of the market in August, as well as hurricane outages down on the Gulf Coast, which have taken big mills like Packaging Corp's DeRidder, Louisiana mill out. And we've had maintenance delays from earlier in the year. So all of this has tightened markets. We've seen a real surge in operating rates. Here I have the operating rates through September, and September was up to 95.9%. The October data that came out yesterday showed another 2+% rise in the operating rate, up to 98.1%. And on the medium size of the industry, the last couple of months have actually been over 100%. So I would say supply is extremely tight at the moment. This is probably the tightest market that I have seen probably since the mid-90s. So very tight supply at this point, and I think probably some of you are experiencing that firsthand. Let's go to the next slide if we could, Renee. To just touch on pricing, we do have the November price increase that's in the market, but pricing is moving up in offshore markets as well. I would say that the $50 hike for November, looks like very much a done deal to me. And I'm not forecasting it, but you have seen in the trade papers the last week or two some speculation about the potential for another price hike early in 2021. I'm really not convinced of the wisdom of that for a number of different reasons, and we can talk about that in Q&A. But But suffice it to say, I think that this 50 hike for November is essentially a done deal. We had seen spot domestic and export prices actually beginning to move up earlier this fall. We have also seen the European producers pushing a 50 euro hike on both kraft linerboard and recycled grades. I think they've gotten about 30 of that at this point, kind of an open question probably on the remaining 20. As I pointed out earlier, demand is not as strong in Europe as we have seen here in the North American market. So let's go to the next slide, Renee. I think, as we think about the current market, I would say that there are three near-term issues. One is whether this demand surge that we're seeing right now continues. I do think as the economy reopens, that we will see some moderation in the e-commerce momentum. I don't think that e-commerce is going to continue to grow at 40 to 45% a year, but I think if that moderates as we move through the year next year with the vaccines and people just getting out more, I think there's a pretty good argument that at least some of that e-commerce moderation will be offset by strengthening on the industrial side of the economy. So there may be a bit of a mitigating factor, and I certainly would not surprise me to see kind of moderate demand growth next year, even with a slowing in e-commerce demand. Let's go to the next slide. The second issue here is really the near-term issue, increases in supply. These are pretty significant increases. If we just tick down the list, IP is currently ramping up the conversion of the first of 2 machines down at the Riverdale, Alabama mill. That'll add about 450,000 tons to the market. Sometime over the next 6 or 8 weeks, New Windy will start ramping up the machine down at Catawba, South Carolina. That's a conversion of a lightweight coated paper machine into containerboard. They're talking at New Windy about 400,000 tons. I ultimately think that machine will do a lot more than 400,000 tons. Then late in the first quarter, we'll see Green Bay Packaging starting up a almost 700,000 ton machine up in Green Bay. This is a huge recycled machine, will be one of the 2 largest machines in North America. They are going to be partially offsetting that increase by the shutdown of an existing 240,000 ton machine on the same site in Green Bay. So the net add there is about 445,000 tons. In addition, we have Biopapal at Port Angeles converting a printing and writing paper mill with smaller machines. That'll be a net add of about 180,000 tons. Nine Dragons is got a conversion. We have Wisconsin Rapids here on the picture, but it's actually, or on the table, it's actually Byron, Wisconsin. That's about 250,000 tons. They're also converting capacity up at Rumford, Maine. And then finally, late next year, we'll see the Atlantic new Atlantic packaging machine in Whitby. I should add that in addition to all of these, we are seeing some of the producers look at other options for increasing supply in the short term. Packaging Corporation is running containerboard here in the fourth quarter on their big white paper machine at Jackson, Alabama. And WestRock is doing the same on a bleach board machine down in Evadale, Texas. So the list that we've got here amounts to about 2.25 million tons of capacity. That would be somewhere between 5 and 6% of industry supply, but there is some other incremental supply out there from these kind of short-term moves by people like Packaging Corp and WestRock. The third issue I want to just touch on briefly is inflation pressure. We haven't really seen much yet on OCC. OCC prices are still quite low, probably on average in the $70 a ton range. That is up about 35 from the trough levels that we hit last year, but still probably not doing a whole lot more than covering collection costs. I think most people are pretty sanguine about OCC prices because of the restrictions on imports over into China. I would just say if you look at OCC over time, it tends to track pretty closely with the overall health of the containerboard market. So I'm a little bit of a contrarian on this. It will not surprise me to see some upward pressure on OCC prices if we continue to see such a strong containerboard market. The other input that definitely is seeing a surge right now is spot freight rates, and some of you are probably encountering that directly. This really has more to do with kind of with spot freight rates, much less to do with kind of contracted freight rates, which is the bigger issue for the industry. So those are kind of I would say the near-term issues. Let's go to the next slide. And we'll talk about some of the longer-term issues ahead for the containerboard industry. Okay, so if we think about demand, I think a reasonable assumption for demand growth going forward is somewhere in the 1.5 to 2.5% range. I think the continuing growth in e-commerce will be partially offset by ongoing efforts to reduce packaging intensity. So you always have some puts and takes that go on in the market. So I would say, e-commerce is definitely growing more than 1.5 to 2.5% a year, but at the same time, we are seeing kind of ongoing efforts to try to reduce packaging intensity. There's been a lot written about different efforts by Amazon to reduce cube size, to eliminate kind of double boxing with measures like the ship and own container. I think another important trend in the business, and probably one that many of you are involved in, is the move toward more graphics, particularly on consumer-facing packaging, whether it's consumer-facing packaging at the store level or whether it's the consumer-facing packaging in the e-commerce channel. I think a lot of this is leveraging the continued improvement that we're seeing in kind of digital print capabilities. So if we can go to the next slide, Renee, we're going to go from demand to supply. And I think there are really two key issues looking out over the next few years on the supply side. The first is the continued shrinkage in the printing and writing paper market. And what I think that and printing and writing paper volumes are down in the 15 to 20 to probably 25% range this year. It's a pretty dramatic drop off that we've seen in most types of printing and writing paper. I do think that this almost certainly will produce more conversion projects over time. The machines that remain in the printing and writing paper market at this point are generally very large and well capitalized assets. So some of the pending conversions that we already know about include Cascades down at Bear Island, Virginia. They're talking about bringing that machine, a former newsprint machine, up as a recycled containerboard machine in late 22. Domtar is at almost exactly the same time talking about converting the one big white paper machine at Kingsport, Tennessee to recycled containerboard. That will be based on their current commentary, a 600,000 ton machine. So you've got, between 1 million and 1,000,001 tons coming up in the Mid-South at the same time, recycled containerboard. PCA looks almost certain to move forward with a full conversion of its Jackson, Alabama white paper machine to containerboard. I think a good kind of estimate there is that they could do 450 to 500,000 tons initially on that machine. And of course, this would be the third conversion that PCA has done. They've already done both DeRidder and Wallula conversions over the last 6 years. And those two conversions have added over 1 million tons of supply to the market. Jackson is one of their two remaining white paper mills. And as the market shrinks, they're gonna convert. And the Jackson machine is a late 90s vintage machine. It's a big 350-inch wide machine. We go to the next one. Other probable or potential conversions of printing and writing paper machines that are out there. There's a Verso mill up at Duluth, Minnesota, which has been running a little bit of craft paper, and Verso had been talking about converting it to lightweight containerboard grades. I think that at the moment, Verso is talking with at least 2 prospective buyers of that mill. Verso will not be the company that runs that mill and produces packaging grade, but they are talking with prospective buyers of the mill. They talked about this on a recent conference call. The numbers that I have heard would suggest that the incremental capital to do that conversion is only about $40 to $50 million. The machine itself is a fairly large, late 80s, early 90s vintage machine. So I would assume that we have news on that over the next 2 or 3 months. A second one is Norpac, which of course was a big newsprint mill. It was owned jointly by Weyerhaeuser and one of the Japanese paper companies. That's been sold to private equity. That's 3 big machines. I think they are already producing some craft paper and lightweight containerboard out at the mill, but I think down the road we could see that pivot much more heavily to packaging grades. Then Domtar, if we look beyond the Kingsport conversion, is talking about a craft linerboard conversion at the Ashdown, Arkansas mill. They're also talking about potential conversions at a big mill in Hawesville, Kentucky, that has a very new paper machine, kind of late 90s vintage machine, as well as a conversion of their Marlboro, South Carolina white paper mill. And then finally, IP has its second machine at Selma or Riverdale, Alabama, available for conversion. I think that's just a question of when. It's not really a question of if. So we've got supply already from the printing and writing conversions, but I think we are going to see more. Second issue, though, is that the North American market's really become very attractive to kind of foreign players, and it's also become more attractive to kind of smaller and upstart integrateds in the industry. The North American market is a large market, and it is a market which has started to grow again after being kind of going through a period of about 10 or 15 years in the early 2000s when it was basically a fairly static market. So a large and growing market, you know, certainly along with China, one of the 2 biggest markets in the world for containerboard. It's also a highly consolidated market at this point, with 4 big players controlling about 3/4 of the market. And then the margins are both very healthy in North America and very stable. The industry has become, you know, much better managed, I would say, over the last decade. Returns have improved in the industry. The value of assets in the industry has gone up. So on this table that I've got at the bottom here, we've just got a look at EBITDA margins for the big North American producers, and they just compared them to kind of the margins for the 2 largest producers over in Europe. And what you can see over time is that earlier in the decade, the gap was quite wide. The gap has narrowed, I think, particularly as recycled fiber costs have come down in Europe. Europe's very dependent on recycled fiber. But there's still a significant gap between European margins and North American margins, and that really is making the market very attractive for the big Europeans as well as others. Let's go to the next slide. So just to go down the list of foreign players that we see investing in the US and North American corrugated market, Pratt Industries, very, very innovative, has built 5 mills in North America, and Anthony Pratt has already talked publicly about adding 2 more mills by 2026. I assume that at least one of these mills will be in either California or Nevada. Anthony has been both buying and building converting capacity out in the California market. They've also been shipping craft linerboard from Tumut, Australia into the California market for some years. So You know, Pratt's probably the most formidable competitor, foreign competitor in the North American market right now, and I see no sign of their momentum slowing. A second company is BioPapal, which is of course, is the biggest of the Mexican producers. They have a little recycled mill down in Puet, New Mexico. They're adding that mill conversion out on the Olympic Peninsula in Port Angeles. But they've also been investing in converting businesses. Most recently, a big new converting plant in the upper Midwest in Lebanon, Indiana. Third company is ND, or Nine Dragons, out of China. They've done the 2 mill conversions that we've talked about. They've also done things like buy de-inked pulp capacity here in North America, and they're currently in the process of building their first box plant in the US between Milwaukee and Chicago. Smurfit Kappa has been in the US market for about the last 10 years. They do have a mill a recycled mill down in Forney, Texas, and converting on both sides of the border in the Southwest US, and then of course down into Mexico, where they're one of the biggest players. David S. Smith, the number 2 player over in Europe, came into the North American market about 3 years ago when they bought Interstate Resources and its 2 mills and converting plants. They've been growing their converting operations. They built a big new converting plant just down the road from BioPapal in Lebanon, Indiana, about 9 months ago. So that's just ramping up. When I talked to them last week, they have plans to add more converting in North America over time. And then I think one of the most interesting companies, Sika, which is privately held and is the number 3 player over in Europe, just recently announced plans to build its first box plant in North America down in southern Ohio, just outside of Cincinnati. I would assume over time that that cycle will add more converting, and then ultimately will add mill capacity. I think they actually are the most competitive mill producer over in the European market right now. I've been able to spend some time with them over in Europe and see some of their assets. It's a very, very impressive company. And I think many of you are familiar with the fact that they've been looking for a way into this market for the last 5 or 6 years. So this construction of their first box plant is the first step in that direction. Let's go to the next slide, Renee. The other thing that's happened, though, is this is a market that's not only attractive for foreign players, but I think it's also become more attractive for some of the existing players and some of the emerging players in North America. A great example is New Indy, which of course is owned 50-50 by the Schwarz Group and the Kraft family up in Boston. They first came into the market when they bought a couple of mills from IP. Mills that IP had to divest as part of the Temple Inland acquisition about 8 years ago. But they've since added Hartford City Paper, and now they're doing the conversion of the Catawba mill in South Carolina. They've also continued to add converting capacity under the New Indy umbrella, but both Schwarz and the Kraft Group have their own converting operations as well. Another player is Green Bay, which we talked about earlier. They're boosting their net mill capacity by about 55 to 60% with the new mill up in Green Bay, but they also continue to expand their box business. Cascades is expanding with the Bear Island conversion. I think they've been very focused on improving their cost position from both a mill and a converting plant. I'm talking to you from Princeton, New Jersey today. And just about 2 years ago, Cascades opened a big new box plant up in Piscataway, New Jersey. So they're very focused, I think, on improving over time their competitive position as both a mill operator and a converter. Hood came into the market the same time New Indy did. They bought the third of the Temple Inland mills in Tennessee that IP had to divest. Then they bought the St. Francis mill from K-Pac. They've been steadily adding converting businesses. And then the final one to mention is Atlantic Packaging, which was just out several weeks ago with the announcement about the new machine at Whitby. So I think for all of these players, there's a view that with margins in the low to mid 20s range right now, and with the four big players being very focused on pricing stability, I think many of the players on this list feel like they can grow more rapidly than the market, take some share over time, and that the big incumbents are more likely to defend price stability rather than to drop price to kind of chase new competition out of the market. So I think that the industry will continue to attract capital, not only from the foreign players that I mentioned earlier, but also from some of the smaller players in the industry that see an opportunity to both generate good returns and to grow market share in a business that is again growing. So with that, Renee, I really want to just open it up to kind of any questions that are out there from the audience.
Hi, Mark. I'm unmuted now. Hopefully you can hear me okay.
Yep, I can hear you fine.
I did have there is one question that came up in the Q&A. I have a few questions after this, but, and I should mention, this was asked right around the time you were turning to your supply side of your presentation. And
right.
The question just reads, any thoughts around white top supply because of the shortages?
Well, I think white top is a really interesting issue because IP is going to produce white top down on this Alabama conversion. But I would suspect that PCA, which doesn't have any white top capacity right now, has to be looking at the option to do white top down at Jackson if they convert that mill, because it's a bleached paper mill right now. So they have a kraft pulp mill with a bleaching system. We know that PCA tends to do a lot of high graphics relative to the other big integrated. So it will not be a surprise at all to me to see them move the white top route. And it's quite possible, I think, that when IP gets around to converting that second machine down in Alabama, that may go white top as well. So I think that white top, with more of a focus on print in the corrugated market, I think that the white top will continue to outgrow the brown side of the industry to a pretty significant degree, Don.
Okay, hopefully I feel like that question was answered very well. I have a question about e-commerce and just maybe how it relates to percentage of retail sales. You did a great job of showing me all those numbers that I've been dying to really know how much COVID would have affected in the short term. Are you able to, do you feel comfortable speculating? I feel like people are a creature of habit. So, a 100-year pandemic comes in, e-commerce, of course, goes way high because everybody has no other choice.
Right.
The question is, assuming there is a vaccine, let's just speculate, I guess. I'm hoping to speculate. Where would that level off? How far back down would it go? Do you feel like because people now are using e-commerce and they've realized how handy it is, would it not go back? It's not going to go all the way back down to where it was. It'll probably level off somewhere in the middle.
I think that's possible. It may actually do even less than, going back to, halfway to where it was. And I think the reality is, I think it's probably going to continue to grow as a percent of retail sales. I think the e-tailers are definitely getting smarter, I think, about not only the amount of packaging they use, the packaging cube. We've had a lot of the freight companies like, FedEx start to charge not only by weight, but by area. But at the same time, I think people are also becoming much more conscious of, kind of enhancing the consumer experience of the package that, hits the doorstep. And I just know from some of the Amazon packages I've seen come, some of them they're doing movie promos and things on some of the Amazon packaging now.
I think heavens that Renee has been muting me so you don't hear the doorbell ringing every 5 minutes. One other question I had was just maybe more about Europe. So North American marketplace, and here I have a note to sum up your entire presentation that anybody that decided to get into this industry are obviously geniuses because of how great things are going. Further to that, though, why would you say that Europe hasn't taken off as much as North America has?
You know, it's a good question. I think that part of it may be they're a little bit behind the curve in kind of e-commerce adoption. You know, maybe, you know, some of what we're seeing right now over in Europe reflects the fact that, you know, the COVID rates really started to pop up in Europe a little sooner than we saw here in North America. I mean, we're kind of in the middle of a big second wave right now, but that really started to kind of play out over in Europe a little bit earlier. So those would be kind of two things that come to my mind.
Okay, that's great. I'm going to stay on there. I think there's a couple more questions in there. Maybe I'll stick with mine first, and I'll have a look at them. On the supply side, you know, you've talked about the amount of supply. I was shocked, actually. I didn't realize there was that much supply that we have access to when you look at converting, when you look at obviously the mills that are already planned to start running in the next 12 months. When do you expect things to level off? And level off is obviously maybe a bad term, but when do you expect turnaround time for material to get back to what we're used to?
You know, I wish I had a good answer for you on that. I mean, clearly there is supply coming, but the real surprise to me this year, Don, was not supply. Because we can, you know, by and large, we can look at least 12 to 18 months forward, right? It's kind of hard to surprise anybody with all of a sudden there's a new containerboard mill up there, right? We know about these things pretty well in advance, but the surprise, I think, to many of us has just been the strength of demand this year. I mean, I can tell you, I'm not going to like name names, but I talked with some of the best run of the private companies, the private integrateds in the industry. And, you know, there was some pretty gloomy sentiment. If I go back and think about the conversations I was having in March and April, where, you know, people were talking, we're going to be in full-blown recession and we're going to get the kind of drop-off in demand that we typically see in a recession during the third and fourth quarters of this year. And here we are. It's November. We just had the October numbers out yesterday, and it was a huge number. So I think that the surprise to people has really been the demand side of the equation. I personally don't think supply has surprised anybody, but I think I would have assumed that demand might be down 4 or 5% this year, even with the benefit from e-commerce. And instead, you know, through October, we're up 2.5%. And I would say, based on the last couple of months, I think the full year FBA numbers are probably going to be up about 3%, which is, you know, again, it's about an 800 basis point swing from what we expected. And that really is what's tightened up the market.
Any thoughts about the potential supply? Now I'm looking maybe way down the road, but supply attrition. What I mean by that is you're adding all this new supply, might be considered more advanced mills than what's currently in the marketplace. Is there any talk about if things were to the supply were to get greater, they were already planning on shutting down a few maybe obsolete mills?
I think that is clearly possible. I mean, I don't want to speculate too much, but, you know, let's just take PCA, for example. You know, they've got medium mills up in Filer City, Michigan, and Tomahawk, Wisconsin. And at least the machines up at Filer City are not huge machines, right? They're fairly old and they're not particularly wide. So you can see some places that people might rationalize. I would guess that it is probably a little bit more, you know, IP and West Rock that are going to do much of that lifting. But yeah, I definitely think you could take some old supply out of the market. And in fact, this is exactly what's going on down in Florence, South Carolina right now, right? West Rock's building a new machine, but they're taking out 3 old machines, and the net add is like 50,000 tons. It's really not much.
Mm-hmm. Okay, well, it looks like I've stolen you for too long here. There's a few questions that have come up. I don't know if you can actually see them by going down to the Q&A at the bottom.
Well, let's have a look here.
Let's see.
All right, with the new administration, any impact you'll see on the market? I I don't see a huge impact. I mean, the question as a financial guy that I've been getting mostly is just impact from an increase in kind of corporate tax rates, because we've had talk about that rate going up to 28% or even higher. I would say with a divided Congress, I think it's unlikely it goes above 28%, but that 300 basis point increase, that kind of increase would not surprise me. I'm not sure that that's a kind of a huge game changer at this point. The next question we've got is, how the OCC market is going to keep up with all this new capacity. And I think it's a great question, because we really have a recycling system in particularly in the U.S. I think you probably have some of this going on in Canada as well. It really is under crisis right now. A lot of municipalities have backed away from recycling program, or backing away from recycling programs. In a lot of cases, recyclables are not being recycled; they're going to the landfill. And we have this whole issue of more and more of these boxes are not going out in back of a Walmart or a Stop and Shop or a Loblaws and going into a baler. They're the 5 or 6 boxes a week that's outside Don's house or outside my house or anybody else's house. Much less efficient to pick up that stuff from individual consumers. So I would say at the moment, I think the market's quite sanguine about this. I've done this long enough that I've seen a lot of ups and downs in the OCC market. And it will not surprise me to see some significant upward pressure on OCC prices over the next year or two. So, and then I see we've got a question from Kim here. We're feeling all of the things with respect to paper shortage, lead times. How long do you see this situation? Kim, I wish I had a good answer for that. Again, I think it really kind of depends on how long this demand surge takes place. But it definitely is, I think, quite clear from talking to not only AICC members up in Canada, but from talking with AICC members around the US. We definitely saw a pickup in volume that started in the summer, but then really, I would say, accelerated sometime in late September. And I have not seen any sign of that mitigating yet.
One more question there from Mike.
Yeah, let's see. The rumored first quarter because they can. Well, I told you, I'm going to be very candid with you guys. I have a very mixed view of this. If you look at those financial numbers on that table I supplied of kind of EBITDA margins, you'll see that in the most recent quarter, basically, the big public guys were probably 19.5% to 21.5% margins. And I think there are some of the private integrateds that I talked about earlier that have probably running margins even better than that. So if you think about the impact of $50 on top of that, you're probably adding another 400 basis points to EBITDA margins. So now we're probably up in the mid-20s again. I mean, those are the types of margins that definitely make it attractive for people to look at adding capital to the industry, whether it's through conversions or whether it's through new machines or new mills. And I think to throw yet another increase on the top of that, you would probably be looking at EBITDA margins potentially in the upper 20s. And I just think those kind of margins are going to attract a lot of capital. And even though the market is quite good right now, I think kind of a trend demand number is probably a good trend demand number is probably 1.5% to 2.5% for the reasons we talked about. So I think that they may be greedy enough in the short term to do this, but I think it would prove potentially value destructive in the longer term if it winds up with just too much capital flowing into the business. Because as tight as it feels right now, we all know it's not going to feel this tight, 12 to 18 months down the road. I mean, we've all been, I think many of us have been through enough ebbs and flows in the business to know that markets do adjust. So I think there definitely is some talk about this. I think Pulp and Paper Week is a bit irresponsible in that they're really, trying to, they seem to me to be almost trying to kind of feed this. And of course, they're in a very ambiguous situation because they're both reporting on the industry, but they're the price arbiter on the industry. So it really, it's a bit of a dysfunctional situation in my view.
I got, just appeared there. There is one little kind of secondary question for Mike. You may have already answered it.
Okay.
I'm just looking in the chat here, but you see that new capacity, or do you see that new capacity having effect on potential price reductions? This assumes box demand stays in the plus 1.5% or greater range.
Well, I think if you looked at just the capacity that we had on that table over the next, let's call it 12 to 14 months, it's about, probably 5.5% addition to industry capacity. So if the market grows 1.5% to 2% or 1.5% to 2.5%, that would suggest that operating rates come down probably 300 basis points, maybe a little over 300 basis points, because we also have some of these short-term moves that are going on. So yeah, I think it definitely could lead to some easing in the market. Nobody really wants to talk about that right now, but I think that's, it's a supply and demand game.
That's a fair question, yeah. Well, that's great. I'm just checking one more time to see if I missed anybody. It looks like we're cleared. That's a thumbs up to Renee.
I'll give her the same thumbs up because she really done a great job with this.
Yeah, it was very smooth. Thank you so much, Mark.
Yeah, and again, Don, any of your members are welcome to get a hold of me if they'd like to, get on the research list. I even, will field occasional questions from some of your members, and I'm happy to do that kind of as best we can. And again, the only thing that I would ask is that it's a two-way street, because the ability of your members to kind of help me kind of assess what's really going on in the market is really quite important to me in kind of publishing good research on the industry. So I'm happy to share my thoughts with you, share my research with you, but I would also like to get some feedback. I'll always hold that confidential. I'm not going to blow anybody up with that, but it's very important to me, very helpful to me in monitoring the market going forward.
It's only fair. You're looking for a pulse of
I'm really just looking, I occasionally will reach out to people and just say, what are you seeing in terms of, volume right now? What's, I upgraded all the stocks in the sector about 5 or 6 weeks ago. And it really came out first of a dinner with an AICC member down in South Carolina. I was down there for a couple of weeks, and I had dinner, kind of an outdoor dinner with somebody. He said, boy, something has happened in the last 2 weeks. He said, I can really, there's been a clear acceleration in the business. So I, kind of thought, well, this is really interesting. He's a guy that I've dealt with for about 10 or 15 years. He owns a number of box plants. So when I went home that evening, I, sent out emails to a number of other AICC members just to try to get a read from them, tried to get a read from some of the brokers that I deal with. And they all pretty much confirmed it. And, that prompted me to kind of go out and raise recommendations on the stocks, which are all up about 15%, 15 to 20% since then. And what he highlighted to me was certainly borne out by these numbers we saw yesterday on the October volumes. I mean, they're the strongest numbers of the year. So that kind of stuff really is invaluable.
Well, that's great. I guess I'll just further say thank you so much again for coming, for being here for us. I can only imagine what your schedule must look like right now. You'd probably be in pretty high demand with all the unique things that are going on in our marketplace. So thank you very much. I'm looking forward to talking to you. I will always respond to those emails and what's going on according to Dawn.
Okay, all right, sounds good.
Thanks again, Mark.